Why banks want you in debt. The truth no one tells you. What if I tell you that banks do not want you to be debt-free? What if I tell you that the perfect customer for a bank is not rich, but permanently in debt? And what if I tell you that the entire banking system, from credit cards to home loans, is designed to keep you borrowing for life? This is not a conspiracy theory. This is how banking actually works. Today, I'll explain this through a real-life style story, so by the end of this video, you'll never look at loans, EMIs, or credit cards the same way again. Let's meet two characters. Person 1, Alex. Good salary. Saves money. Avoids loans. Pays everything in cash. Alex believes debt is bad, I'll stay free. Person 2, Mike. Same salary as Alex. Uses credit card for everything. Car loan. Home loan. Buys gadgets on EMI. Mike believes why pay full when EMI is available? Now here's the shocking part. Banks love Mike. Banks ignore Alex. Why? Banks don't earn from savers. Let's understand a basic truth. Banks do not make money when you save. When you keep money in, savings account, fixed deposit, the bank actually pays you interest. Bears cost of safety and compliance. For banks, savers are a liability. But borrowers are assets. Debt is a machine. Now look at Mike's life. Credit card interest, car loan, home loan, processing fees, late payment charges, annual fees, every month without fail. Money flows from Mike to bank, even if Mike pays minimum due delays. Sometimes extends loan tenure, the bank still wins. That's why banks don't advertise. Become debt-free. They advertise easy EMI. Buy now, pay later, minimum due available. Why banks promote EMIs? Let's break EMI psychology. If a phone costs rupees 1 lakh, most people hesitate. But if the bank says only rupees 5,000 per month, 0% EMI, suddenly it feels cheap. But here's the trick. EMI disconnects you from total cost. You stop thinking long-term. You buy more than you need. Banks love this behavior because more purchases equals more loans. More loans equals more interest. More interest equals predictable income. Why credit cards are gold for banks? Credit cards are the most profitable product for banks. Why? Because interest compounds monthly. Penalties are huge. Users don't feel pain immediately. Let's say you pay only minimum due. The bank earns interest, late fees, GST on interest, extended debt life. That's why banks send messages like, relax, just pay minimum due. Minimum due is not help. It's a trap. Why banks don't mind defaults. Here's another uncomfortable truth. Banks are not scared of default. Why? Because loans are insured. Loans are sold to other institutions. Banks recover via legal systems. Interest earned already covers risk. Banks fear only one type of customer. Someone who doesn't borrow. Someone who closes loans early. That customer breaks the system. USA banking secret. In the USA, this system is even stronger. Credit score controls your life. Debt decides your status. Loans are packaged and sold. Debt becomes a tradable product. That's why US banks are among the most profitable businesses in the world. They don't sell money, they sell debt time. The real truth. So remember this. Banks don't want you rich. Banks don't want you debt-free. Banks want you comfortably trapped. in long-term debt. Debt is not evil, but ignorant debt is dangerous. The smartest people don't avoid loans, they control them. If this video opened your eyes like this video, subscribe for real finance knowledge. Comment "Wake up" if you never saw banking this way before. Next episode, how banks create money out of nothing. Because here, we don't teach money myths, we expose money systems.